wabarakatuh. Now we will discuss, I will show you the answer for final exam question December 2019, question 2 on MFRS15 contract revenue. Okay, the question here says that the core principle of MFRS15 revenue from contract with customer is that an entity recognizes revenue to depict the transfer of promised goods or services to customer in an amount that reflect the consideration to which the entity expect to be entitled in exchange for those goods or services. It means that how much the payment the company is expected to receive when the company delivered the goods or the service. So the question define the term stand-alone price. Okay, so part A. What is the definition of stand-alone price? So if you remember, stand-alone price is used in step 4 when you allocate the performance obligation. Okay, alright, so when you define stand-alone price is the price of the promised goods or services. Okay, if they were sold on stand-alone basis. Okay, this is in step 4. When you allocate the transaction price to each PO, you need to allocate according to the stand-alone price. So this is the definition of stand-alone price. Okay, and then part B, list 2 criteria to determine whether the goods, the promised goods or service are distinct. So this is important for you to identify whether they are distinct or not, because if they are distinct, then in step 2 you should identify those promised goods or services as a different performance obligation. So these criteria you can find in Tanjong Tong. Alright, okay, down here. Okay, it is distinct if both of the following criteria are met: that the investor pula. If the customer can benefit from the goods on its own, and that the promised goods are transferred to the customer is separately identifiable. Okay, so to answer this, okay, okay, so to answer this, number 1, Assalamualaikum. Kenapa dia pergi tengah? Okay, so just start. Alright, so the 2 criteria as mentioned just now, when the customer can benefit from the goods or services on its own, and second, when the promised goods or services is the promise to transfer the goods or services is separately identifiable. Okay, so this is the second criteria. Alright. Okay, next question. This is a question scenario based. Yami Berhad is a company supplying kitchen equipment. The company closes its account on 30th June every year. On 1st January 2019, Yami sold and delivered equipment to a customer. Okay, now let's write the step. 1, 2, 3, 4, 5. Okay, step 1, that is a contract. Okay, when you sell on 1st January 2019. Okay, yes, there is a contract. And then Yami sold and delivered equipment to a customer. So this is the PO. Sell the equipment. Okay, Yami also agreed to service the equipment for 1 year period. So that means there are 2 PO. Okay, one is to sell the equipment and second is to provide service the equipment for 1 year. Okay, so you identify this promise as different PO because customer can benefit from the equipment on its own, and you can also benefit from the service, and you're able to identify the service when you transfer the service to the customer. Okay, and then step 3. Alright, now remember when you provide service to the customer with no additional charge here. So both parties agreed with the contract price of 300,000. So this is the transaction price, RM 300,000. Okay, the standalone selling price of the equipment was 250,000. This is to allocate the TP to each PO. So standalone price for equipment is RM 250,000 and standalone price for the service. So this is why we say that this promised service is separately identified. Okay, so the standalone price for the service is 60,000. Okay, Yami Berhad would normally expect to receive 60,000 in consideration for providing 1 year service of the equipment. So RM 60,000 here. So later you will allocate. Okay, step 5. Now it has been mentioned early in this question. On 1st January 2019, Yami sold and delivered. So you have delivered the equipment. On 1st January 2019. Okay. Yami issued an invoice amounting to 300,000 to the customer. Okay, on 3rd January, the amount was still outstanding. So you issue invoice on 3rd January. Okay, so still outstanding on 30th June. When you close account, the financial year end of the business is 30th June, yeah. Okay, so now required, explain the treatment of this transaction by Yami Berhad for the year ended 30th June 19 using the 5-step model, and prepare the journal entry to record the above contract for the year ended 30th June 19. So the 5-step, okay, to answer that, step 1, identify the contract with customer, okay, there is a contract when company sell and deliver the equipment on 1st January. Okay, step 2, identify the performance obligation in the contract. There are 2 performance obligations. Okay, that is 1, to deliver the equipment, and second to provide service on the equipment for 1 year. Okay, step 3, determine the transaction price. So the transaction price is RM 300,000. Okay, step 4, allocate the transaction price to each performance obligation. Right, so here we need to do some calculation. Right, let's draw a table, insert a table. So this is your PO, stand-alone price, and allocated P ataupun revenue for each PO. So your PO is equipment and service of equipment. So the stand-alone price for equipment is 250,000 and service is 60,000. Okay, so the allocated TP, okay, we need to total the total stand-alone price is 310,000. So we will allocate 250 divided by 310 times with TP of 300,000. So you should get 241,935. And for service, 60,000 divided by 310,000 times 300,000. So you should get 58,065. Okay, so this is the revenue for each PO. Okay, step 5. Recognize revenue when entity satisfy the performance obligation. So for the equipment, Okay, for the equipment, revenue is recognized. Okay, recognize revenue of RM241 here. Okay, at point of time when the equipment is delivered on 1st January 2019. Okay, and for the service, you recognize revenue over time as the service were provided, because remember the service is over 1 year, so you will recognize revenue over time as the service were provided, and the revenue to be recognized for the year ended 30th June, when you close the financial, it is a financial year end when you close the account. Okay, was RM. Okay, how much? Okay, now because this revenue 58,065 here is for 1 year, and as at 30th June, your business only performed for 6 months. From 1st January, you enter the contract, you deliver the goods up to 30th June. So it's just 6 months. So you need to times with 6/12. Okay, you have just performed the service for 6 months. So that will be how much? 29033. Okay. Alright, so done with that. Okay, now we go to journal entries. I think journal entry I will explain down here. Okay, now this is the scenario. You deliver the equipment here, you issue invoice to the customer on 3rd January, you close your account 30th June, and the service is for 1 year. So for the journal entry, you can recognize the revenue when you deliver the goods. So on 1st January, okay, recognize revenue for equipment. So that will be debit, credit, sales revenue for the equipment. That will be, just now we calculated here, 241,935. Okay, 241,935. Alright, and then what should we debit here? We cannot debit bank because we have not received the money. Can we debit account receivable? Account receivable, no, because at this date, you are not entitled to receive the payment yet, because you issue to the customer, you issue the invoice on 3rd January. So on this date, it will be contract asset. Okay, you have delivered the goods, but you are not entitled to receive the payment yet. Okay, now next is on the closing date. Okay, so on the closing date, you have performed your services for 6 months. Okay, from 1st January until 30th June. Therefore, you can credit your sales revenue for the service that you have calculated just now, 29033. Okay, so what should you debit? Now you have to understand that you have on 3rd January you have issued invoice to customer, therefore the customer is liable to pay to you, right? So you should reduce this contract asset. However, you do not reduce by the total 241935 because up to 30th June it is only 6 months, and up to this date you have not performed all of your promise service. Okay, because your service you have another 6 months, so you have not fully performed the promise service, therefore you cannot credit the total of 241935. So since there is 6 months here, so you need to calculate for 6 months 241935 divided by times 6/12 or divided by 2, that will be 120,968. Okay, and therefore you will debit account receivable, because the question says up to 30th June the company has not the customer has not made the payment, so they are owing to the business. So if you add these two, you will get 150,000. Okay, so if you refer back to the transaction price that you issued to your customer, it is actually 300,000. So when it is half year for 6 months, then they actually owe you 150,000, and another 150,000, okay, will be shown in the next accounting period. All right, I hope you understand. Thank you very much.